The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. Thank you for joining me on today's workers' compensation webinar. My name is Patrick Kim, and I'm the work comp specialist at Beere&Purves. And this is the first in a series of webinars that's intended to get you all familiar with workers' compensation. So for today's webinar, we'll be going over general knowledge, and this will be essentially pretty much the basic of basics. And then as we progress through the webinars in the future, they'll get to slightly more advanced topics. So with that being said, let's get started. So for today's agenda, we'll be starting with, again, the basic of basics. What is workers' compensation, and how to look at a group in terms of who needs it, when is workers' compensation not an issue, how do we know if a group needs workers' compensation, and when looking at a group, what might be some items that underwriting is going to look out for to see if we can help out with that. So let's get started. So workers' compensation, pretty much inherently everyone knows what workers' compensation is. It's mandatory coverage, and it pays for workplace injuries, and if you're fortunate enough, the carrier will give you money. The reality, this isn't really far off from reality. If an employee gets injured on the job or because of the job, workers' compensation insurance kicks in and pays for whatever medical bills the employees have. And this will also even cover certain claims in the event of a fatality. Typically, this is for very basic burial costs, as well as sometimes they'll even cover payments to beneficiaries for a certain time period. So even if an employee is responsible for their own injury due to negligence or perhaps even gross incompetence, like getting drunk on the job or consuming drugs on the job, workers' compensation will still kick in and pay for the medical bills and even time off, like PTO, vacation time, or sick time, assuming the injury wasn't fraudulent. So an example might be if an employee consumes cannabis, for example, they climb a ladder and then fall, workers' compensation would cover the medical bills, and if the employee needed to take time off to see a physical therapist or just physically wasn't capable of working, workers' compensation would be able to provide a partial wage replacement. Again, it's not a full replacement for wages, it's only partial. So if an individual might have PTO, that might be something they typically would take. Kind of the core point here is that workers' compensation, again, covers on-the-job injuries or injuries because of the job, and it's a no-fault insurance coverage. So whoever's at fault, if the injury or illness occurred on the job or because of the job, the carrier is going to kick in and take over for it. The only exception to this is if it's a fraudulent claim. The carrier never will cover a fraud claim, and they'll even go out of their way to investigate a suspicious or an odd claim. That's more of an advanced topic that we'll get into later in the future, however. So very easily, who needs workers' compensation? And it's really any business within the United States or a U.S. territory. So long as a business has at least one employee, workers' compensation is going to be required. An employee can be a W-2, a 1099, and in some cases, even an independent contractor. 1099s and independent contractors are usually a point of contention because states' laws will be pretty explicit about saying an independent contractor does not need workers' compensation, and this is technically true. The issue, though, is that when an independent contractor does a job that regular staff do for the business, so if you have an independent contractor that is an accountant, for example, and that accountant is doing work for an accounting firm, it could be argued that that independent contractor does need to be covered by the accounting firm's workers' compensation insurance coverage. So even really the only exception to that rule might be if the independent contractor is doing something totally separate. So an example would be you hire a plumber as an independent contractor for an accounting firm. Then that independent contractor, the plumber, could be waived from workers' compensation coverage because there's no relationship between the plumbing services provided and what the accounting firm actually does, which is accounting services. Another point of contention is 1099 staff members. 1099 staff members are not automatically assumed to be independent contractors. In order for a 1099 staff member to be waived from workers' compensation coverage, that staff member needs to provide proof that either they have their own workers' compensation policy, or it can be clearly shown that they do something totally unrelated to the group. So again, going back to the plumber example, independent contractor, you pay them as a 1099 for an accounting firm. There's a clear separation between what the accounting firm does and what the plumber actually does. This 1099s typically become an issue in the event of temporary laborers through a contracting service, like a temp agency, or might be a situation where an employer group might just need a little extra support. So they'll go out of their way to hire a few extra individuals and just pay them a 1099. The issuance of a 1099 does not automatically mean that an individual is an independent contractor and therefore would not need workers' compensation coverage. And again, in order to affirm that an individual does not need workers' compensation coverage, it's always best to have some sort of proof. Also, another little quirk is that, contrary to popular belief, family members do actually need to be covered by workers' compensation. Each state has some nuances when it comes to family members and whether or not they need workers' compensation coverage, but generally family members do indeed need to be included in workers' compensation coverage unless that family member owns a percentage of the business. So technically, sons, daughters, direct family members of a family-owned business, they do indeed need to be covered by workers' compensation. Uncles, aunts, grandparents, they still need to be covered by workers' compensation. I think the popular belief is they don't need to be covered is because it's not like the family's going to go out of their way to report to a Department of Industrial Relations, say, hey, my son, wife, daughter-in-law, son-in-law is in violation of state law, unless there's already some sort of bad blood there. Anyway, moving on. So really, when is workers' compensation not an issue? There are a few situations where workers' compensation doesn't need to be on your periphery. The first situation is when the state that the group is based in has a monopolistic workers' compensation fund. This means that the only place to get workers' compensation in that state is from the state's own proprietary workers' compensation fund. For California, it's the state fund. For Washington, it's their version of state fund. Same thing with, I believe, Oregon as well. There are a handful of monopolistic states. And the way that those kind of states give coverage to employer groups is essentially when a business registers with the Secretary of State or files any sort of legal docs, the Department of Industrial Relations automatically gets notified, so they'll automatically create an account and then they'll reach out to the group directly saying, hey, you registered for a business in our state, we are getting your workers' compensation policy set up, please log in or create an account so that we can go through the motions with you. This is your quote, this is how it's going to be bound, this is what your coverages are, these are your obligations, et cetera, and so on. Another consideration when work comp is not an issue is owner-only groups. And this is because owners are allowed to be waived from workers' compensation. Because if an owner were to be obligated to be included in workers' compensation coverage, and if they were to file a claim, they essentially would be filing a claim against themselves, which isn't exactly fair or reasonable for the owners. So that's why they are allowed to be waived from workers' compensation coverage. There are some nuances in terms of the details. Typically, just being a shareholder, for example, doesn't mean that, one, you have to be included in work comp, or two, that you're eligible to be waived from workers' compensation coverage. Typically, you need some sort of, you need a title. This can be a president, CEO, CFO, something like that, managing member or partner in a firm. And you need to have some sort of ownership percentage. Again, the states have their own kind of nuances, but for the state of California, for a corporation at least, you need 15% ownership, whereas the rest of the states, it's just you need at least 1% or something like that. But again, each state has some sort of nuance. So just keep that in mind. And another situation is if all staff members work outside of the United States. So workers' compensation compliance regulation is applicable for the United States and US territories. So if you have a business where every single one of their staff members work outside of the US, that's beyond the work comp obligations of the organization. Again, this is assuming it's a US-based organization and all their staff members are outside the United States, in which case this essentially becomes an owner-only group. So that's why workers' compensation wouldn't be an issue. The last point is if employees can provide proof of their own workers' compensation coverage. This goes back to 1099s and independent contractors. If an employee, whether if they're being paid a 1099 or if they are being viewed as independent contractor, they still need to provide some sort of proof that they either have their own workers' compensation coverage or they're being covered by someone else's workers' compensation coverage policy. So for temp agencies, they sometimes provide workers' compensation coverage for staff that they loan out. In order to prove that they provide that coverage and to protect groups directly, the group needs to go out to the temp agency and say, do you provide workers' compensation coverage for this 1099 staff member you're leasing to me? And if so, please provide proof of coverage. Sometimes they'll just issue what's called a certificate of insurance, and unfortunately that's not enough. They need to provide a policy declaration page, and it's just the first page of the work comp policy doc. It's going to have the business name. Sometimes they'll have the business FEIN number, but it will always, always, always have an effective date and a policy number, and that's really the kicker there in terms of providing proof of coverage. When the temp employee is hired, their hire date needs to coincide with the workers' compensation policy's effective date with the temp agency. So this is kind of just going a little more in detail. How do I identify a group that does need workers' compensation coverage? Typically, it's pretty blunt. Does an employer group have employees? Then yes, they do. But sometimes groups do get a little confused because they think that, oh, well, we're a small organization. I'm just paying my staff as a 1099. Because they're 1099, they don't need work comp coverage. Unfortunately, that's not quite the case. A few questions to bluntly ask is, does an employer make deductions on behalf of a staff member? If that's the case, and it's very clear that that staff member to whom the employer group is making a deduction on behalf of, they're required to have, they at least need to be covered by workers' compensation coverage. Again, kind of a rule of thumb is when it comes to identifying a group for work comp is whether or not they can prove that either they currently have work comp coverage or that someone else is providing coverage somewhere. Some sort of proof needs to be provided. So either the employee needs to provide proof that they're being covered by someone else, or the temp agency can provide proof of coverage. And this is also in the event of a PEO. Sometimes employer groups think that because they're working with a PEO and that their staff is technically being leased out, that the employer doesn't have any obligation to provide work comp coverage, and it's the responsibility of the PEO. The group still needs to have workers' compensation coverage, which they can acquire from a PEO or from a private insurance carrier, but the fact remains that someone somewhere needs to provide workers' compensation coverage for those employees. And the same thing can apply to an independent contractor. Again, they need to provide some sort of proof of coverage. So if an employer group insists that an employee does not need to be covered by work comp, then the very simple question that needs to be asked is, can you prove it? Can you provide a policy declaration? Can you provide something that makes it very clear that the employee in question is doing something that's totally unrelated to the organization, or can you provide a proof that the group has its own separate workers' compensation policy? And again, this comes in form of a policy declaration. So in terms of the repercussions of not having workers' compensation, the repercussions can be quite heavy. So first off, the group is liable for the cost of the medical bills and any relevant medical treatment. So this is the emergency room visit, this is any sort of medication, any sort of therapy, anything related to the injury and to make that individual whole again. The group, I find that sometimes groups can try and push the injury onto the medical insurance, but that opens up another can of worms because workers' compensation by law is supposed to be the exclusive remedy for work-related injuries. And that can open up the group for possible lawsuits and compliance actions from the state. And it also opens up kind of an avenue for the employee to attempt to exploit the employer by saying, you know, you didn't have workers' compensation coverage, you're supposed to have it, so I'm going to file a complaint against you with the Department of Industrial Relations if you don't, if you don't take it easy on me or something. Speaking of compliance actions, groups can also be forced to shut down their business until workers' compensation has been set up and the regulatory entities have been notified. So it's not just a very simple, I got a quote and I accept the work comp policy. On top of that, the regulatory entities also need to be notified and process the proof of workers' compensation coverage on their backside as well. So that can actually delay and extend the length of time that the business is forced to be shut down. And on top of being forced to shut down, the state can also add additional penalties and fines in addition to jail time. So I believe the minimum fee currently is $10,000 for a lapse in workers' compensation coverage, and that's just for the lapse. The state itself can also issue additional fines up to $100,000. So your business gets shut down, you get a $10,000 fee, and you can get up to an additional $100,000 in fee. And depending on how egregious the lapse in coverage is, you can also receive jail time. So there are plenty of options in terms of getting coverage for workers' compensation. You can go to a private carrier. This can be from employers' compensation, Travelers, Hartford. Again, any private carrier is more than willing to provide coverage. Another option is state funds. So if a group just isn't a good fit with some of the other private carriers, there's always the option of state fund. State fund will not reject any workers' compensation group. That's their role, to provide coverage to pretty much groups that no one would really want to take. Another option is to be self-insured. And this means that an employer group sets aside a huge chunk of money into a separate trust fund account in order to directly provide workers' compensation benefits to staff. This isn't really a viable option for small businesses because they don't have that kind of cash set aside. But this could work for some other employers that either have a huge amount of cash on hand and trying to cut down or have more direct control of their work comp costs, or they again are a large business group who again want to take a more proactive role in ensuring the safety of their employees. There are certain regulatory requirements. I believe there's a minimum balance that has to be maintained at all times, and this fluctuates I think every year or so in terms of what the group's compliance obligations are. But there is a bare minimum balance that always has to be maintained in that separate account. So this is more for when we take a look at a group, what is it that underwritings consider? So let's assume that we have a brand new business group and they need coverage, and we're trying to do everything we can to make sure that they're in compliance with their work comp obligations. What is it the carriers are looking for? And really, the closest comparison I can provide is sort of like Delta. The work comp carriers work kind of like Delta Dental in the sense that there are certain groups that carriers prefer and offer the most discounted rates, and some groups that the carrier will accept but provide less discounts and be a little more stringent on their underwriting requirements. And there are also some groups that the carrier will flat out reject. It's just not a good fit, and the carrier might not be equipped to deal with the nature of the claims that the group might provide. So typically a carrier that might specialize in white collar groups and have all these perks and benefit that cater to a white collar high tech firm, they just might not have the technical expertise in order to handle claims that might come from a contracting group or groups that might be exposed to chemicals. They just don't have the specialization to handle those kind of claims and provide those services. Another consideration is whether or not a group has a history of chronic work comp claims. The reason for this is because carriers are trying to encourage groups to be safe, but they also have to balance financial solvency as well. So if a group has a history of chronic work comp claims, typically a carrier will not look very, very favorably upon that, even if it's a targeted group. So let's say you have a white collar group that is, and a producer trying to submit a computer startup. If that, well, not exactly a startup because they need to have a history, but let's say it's a computer firm that's been in business for 20 years, and like clockwork, every year they're just getting chronic claims, filing claims late, or they have a big accident pretty regularly. The carrier is going to institute more stricter underwriting guidelines and ask for additional information like, can you give us a draft of what your safety compliance program is? Do you do safety meetings? What sort of safety equipment you might have in order to see whether or not the group can be a good fit for the carrier. In addition, the carrier might actually also start charging additional fees or increase their premiums because of a concern that the group is a high risk. So they're trying to kind of mitigate that sort of risk on the part of the carrier. And another issue is lapses in coverage. This is because carriers get really scared about claims that should have been filed but never did. Then the injury got worse, and now the new carrier is on the hook for the really expensive claim. Typically, carriers want claims to be filed timely to mitigate an injury getting worse, as well as making sure that there's no compliance issues. Because if an employer doesn't provide the necessary claims documentation to the employee, then it becomes a compliance issue. The employee can complain to the Department of Industrial Relations, which loops in the employer, which can also loop in the carrier. And this is obviously something kind of a nightmare scenario for everyone involved. Another issue is that it could also be a fraud issue. So if a claim hasn't been filed within a reasonable time frame, ideally 24 to 72 hours, the carrier is going to start to investigate a claim that happened maybe a month ago and say, well, it took you a month to file a claim, what's going on? Was there an issue? Did you ever see a doctor? And if that never happened, the carrier is going to start to look at the group and say, how come you never filed any sort of documentation? Where's your Cal OSHA accident report? Where's your California workers' compensation claim form? What's going on? So really, this is just about trying to mitigate risk and making sure that the group is complying with all of their obligations as well, and making sure that no one else really has to get involved in a potential compliance action or legal action as well. So essentially, we're pretty much approaching the end of our webinar, and these are just some of the services Beere&Purves provides. Really, we just make the entire work comp process very simple. We complete the work comp application form, we review it, we quote on your behalf, we pre-underwrite, and then essentially once the underwriting is reviewed and processed, we'll provide you a quote or we'll give you an explanation on why the group is declined. But in general, this is kind of a snapshot in terms of what the work comp quote and sale process is like. You complete the universal work comp app form. The application is submitted for a quote. The application is reviewed by the carrier. The carrier reviews the application and they'll ask for additional underwriting items, or they'll just directly provide a quote or provide a declination letter. Assuming a quote is generated and the group is happy with the price and the rates, really all that's needed is just a simple email affirming that the group wishes to bind the group. There's no checks or documentation involved. It's just a very simple email. Sometimes some carriers will allow for a check to be collected on your behalf, but more often than not, it's just simpler to have the group submit the check when they get the invoice, just so that they can review it, make sure that everything's good to go. So thank you all for joining me today. I really appreciate it, and I'll be taking a look at your questions now. Oops. Whoa. Bear with me, a few questions popped up really quickly. So this question involving a motel owner that hires a repair person to do various projects. And the hotel owner pays the individual 1099. The question is, does the 1099 wages and the handyman, are they not covered by workers' compensation? That's a very good question, and the answer is a yes and a no. If that handyman can prove that they have their own separate workers' compensation policy, then they do not need to be covered by the hotel's workers' compensation policy. However, if there is no proof of coverage, then that handyman would in fact be covered by workers' compensation coverage, and that's because the motel owner classification also includes maintenance staff. So these are janitors. Sometimes they even include chefs sometimes, which is a little odd because that's also a separate class code. But for that one, we really, the safest answer to be, I would say, is if that handyman can provide proof of separate work comp coverage, then they don't have to be included. If they are not able to provide proof, they're going to be included in coverage. Let's see. So there's a question regarding compensation. So generally speaking, for the state of California, life and health producers can quote, sell, and be paid on workers' compensation with only a life and health license. The only nuance there is that if you don't have a P&C license, is that unfortunately commissions can't be paid throughout the lifetime of the policy unless it's considered what the state of California calls 24-hour coverage. So 24-hour coverage essentially means that you have the life and health sign, and you have workers' compensation, and the carrier and the medical care and the work comp carrier have a partnership program saying we're going to provide what's called 24-hour coverage. So it provides coverage at home and at work. To my knowledge, only Employers' Compensation and Anthem Blue Cross has this partnership program that allows life and health agents to be paid for the life of both the work comp policy and the Anthem Blue Cross policy. If a producer just quotes and sells work comp and they only have a life and health license, they can typically only be paid for the first year of that work comp policy. Anything beyond would just become a compliance issue. Let's see here. I have another question. So this is a little more of an interesting question. So let's say an employee clocked in to their place of work, said they felt dizzy, and a fellow employee called the ambulance on behalf of the employee. Would that person be covered by workers' compensation? Straight answer is yes. This, we might be going a little into the weeds. It's more of an advanced topic, but essentially for workers' compensation, anytime someone gets injured, whether it's his fault or her fault, even if it could be potentially fraud, the workers' compensation carrier will cover up to $10,000 in medical related benefits. So let's say, so for example, attorneys. Let's say an attorney is having a really rough time, they're really, really stressed, they have a nervous breakdown, and they tell their employer, hey, I need to go see a psychologist, I'm having a nervous breakdown, I'm depressed, I'm whatever. And the employer is obligated to say, fine, you can get up to $10,000 in medical, pharmaceutical, or psychological services up to $10,000 while I file your claim on your behalf. And if the carrier determines that the attorney's stress claim was not work-related, the carrier is not going to cover any benefit in excess of $10,000. But everything up to $10,000 the carrier will cover. And this is something that the medical provider and the carrier is going to work out. Again, that's why it's very important we have claims that are filed timely. And there's also documentation so that we can make sure that in the event of a claim, everything is documented. We can make sure that that person gets their $10,000 in medical services. And worst case scenario, if there needs to be more services, we have proof that we did our due diligence, provided documentation on time, and we can actually put pressure on the carrier and say, you need to hurry up, because carriers also have a compliance obligation as well, where they have to process a claim within a certain time frame. I think they have to come to a determination within 30 days of the injury on whether or not it's a fraudulent claim or it's a bona fide claim and get paid out. But bare minimum, I think 2 weeks, the carrier has to give you something, a letter saying, we're still reviewing your claim, please give us time, or we're in consideration of your claim, we're on the way there. Typical commission on a work comp policy, percentage splits can get pretty crazy because it depends on carrier, unfortunately, and sometimes it even depends on states. So I think for California, sometimes it can range from 10% to 15%, and then if it's Nevada, sometimes it can be 12% for the first year of the policy, and then upon renewal, it can be 6%. So unfortunately, it fluctuates pretty dramatically. Premium-wise, I think we might be a little more relevant, and unfortunately, that can also fluctuate as well because it's not exactly an issue of what you see is what you get all the time, because the carrier workers' compensation premiums have greater flexibility than the life and health side, whereas life and health, it might just simply be the rates are the rates, the premium is a premium, and there's not that much flexibility in terms of how to reduce the premiums or change rates. It's just not possible in a small group market, maybe on a large group market where you have to still have composite rates. For work comp, the rates are still the rates, but depending on what the group can provide, the premiums can be discounted as well. So if the group says, I have a wonderful safety program, I've never had a claim in 10 years, we do ergonomics training, we do safety training, people are CPR certified. These are all reasons that the carrier can provide additional discounts to the annual premium. I guess something to help clarify a little more is that small group work comp can be considered anywhere between, I think the lowest right now is $500 in premium, all the way to about $15,000 in premium, and beyond the $15,000 to I think $50,000, that's when we start to enter middle market. There's no real distinction in between the coverages and the products or what appointments you need to have. So for example, you don't need to be appointed on the large group and small group side. You just need to be appointed with the carrier and you can sell large group, small group, whatever. Typically you want to be knowledgeable about those specific market segments because underwriting guidelines can vary dramatically, as well as the servicing requirements as well. And for Beere&Purves, there's no minimum size group to submit business. We'll take pretty much anything and everything so long as it fits within the carrier guidelines. We can't submit a group to put into context, we can't really submit a contracting group to Delta Dental and give you rates. The carrier is just not going to accept it. So if so long as a group meets eligibility with the carrier, then yes, there's no minimum size. Something to caveat though is that for workers' compensation, there is something called a minimum premium size. So for some, the minimum premium means that regardless of how small the group is, regardless of how low the rates are, the carrier will always, always, always charge a minimum premium amount. So let's say, real life example, there was a very small technology firm, computer programming firm, they were a startup. They literally had one employee, and because the rates were so cheap, the premium was essentially, I think, $90. But because the carrier's minimum premium was $750, the carrier had to add an additional whatever amount to bring the premium up to $750. And that includes any sort of state-mandated taxes and fees that the carrier is obligated to collect. Again, there's no minimum size, no minimum. As long as you submit the business, we'll essentially take it, as long as it meets carrier eligibility. And again, the slides and the recording will be made available to you. So when you register, we'll be sending out a link that has all the documentation as well as the basic recording of the presentation, including the Q&A session, I believe. Okay, so last round for questions. Okay, so I think we're set. Again, if there's any questions or concerns regarding work comp, please let me know. My email will also be included in the presentation. If you wish for a phone call or any more detailed questions, please let me know. I'm more than happy to discuss them with you, and as well as to elaborate on any issues you might have. Our next webinar will be coming momentarily, but you all will be receiving an email indicating what the topic is. So I thank you all so much for your time, and enjoy the rest of your day.